Hey, it's Ryan from the Option Income Advisor, and this is the trade of the day for July 6, 2021. We're in a series called the top dividend stocks for the triple income wheel. And so basically these are dividend stocks that work really well within the triple income wheel strategy. And so we're looking to sell cash secured puts on these trades, but obviously if we get stuck with them and get assigned and are forced to write a covered call, it's always good to have good, solid, high quality dividend stocks that could potentially pay a dividend while we're doing that. So let's take a look. Today we're doing Intel. Intel's a stock that's sold off quite a bit, but we'll go more into detail in some of these rankings because these dividend stocks have typically some better rankings, especially in the safety and value range than some of the stocks we've been looking at recently, kind of on the cyclical side. And so you can see Intel ranks pretty well, above average in dividend, safety, and value. And the strike zone we're looking at is 48 to 53 for this stock. And strike zone factors that are affecting that, you got volatility and risk and pullback. You can see they're both green, so they're on the high end of our rankings for those, and so they're not affecting the margin of safety as much as a stock that would have a lower rating there. And essentially what that is the volatility risk just means that this stock is kind of on a lower volatility side, and so we don't need as big of a margin of safety. And the same thing with the pullback indicator. This stock's pulled back. What were we at? About 17% so far. So it's already pulled back 17%. So what the pullback indicator of 9 says is that, look, this stock's already pulled back quite a bit compared to what it should kind of normal pullback would be for a stock like this of this volatility. And so we've already kind of gotten a big piece of that in theory. And so it kind of, again, adjust dynamically to the fact that this stock's already pulled back. We do have earnings risk within the next few weeks. And so, as we're looking for trades to put on, we need to take that into account, and we'll take a look at it down below here. So let's take a look at the chart, because this chart's, so we're at 48 to 53, and so I always like to take a look at the chart just to kind of see where we're at. You can see it's been trading in a range for several years now, right? It peaked, what is that, about 2-3 months ago, but it was right around the peak from back in 20, basically before the pandemic. So it went back up to kind of pre-pandemic highs, and then it's sold off quite a bit. And there's a lot going on in the manufacturing space of semiconductors right now, and delays and all that stuff. And so that's more kind of qualitative, long-term kind of perspectives. And so what we're looking at, though, is kind of what's the short term. Is it a reasonable price that we can get in, and do we feel comfortable about that? Especially just continuing to do the wheel, right? As if you can find a stock where you feel comfortable at the price, and as that price fluctuates a little bit, knowing you've got that margin of safety, you feel pretty good whenever you can find a stock that you've got, just some decent support and resistance, etc. So I'm going to move this out just a little bit. So our strike zone again is 48 to 53, and so we can kind of see where we're at here. And I would say, yeah, the top end of this range, you can see where we're at right here. This is right around 53.5. Right, so the top, and that looks like very strong support to me. It's a place that the stock had gone down to back in January. We shot up to, again, almost all-time highs. Came back down, tested that level, and now we just kind of been bouncing around there. So I would expect that would be kind of the first level of support that would hold. And it's good that correlates kind of right with right where we're at with our strike zone. And so that that just makes me feel better about where our strike zone is, knowing that we've got that support level there. So let's kind of move on. talk just a little bit about, because this stock has a 10 valuation. So, I just want to touch on that briefly while we're here. And you can kind of see, so these are the 4 main multiples that we look at, price to sales, price to earnings, price to book, and enterprise value to EBITDA. And you can kind of see that. So right now, Intel trades at a discount to all of those multiples, and especially on a forward basis, because as we're looking forward, and I'll scroll up a little bit here. As we're looking on a forward basis, the expectations are that earnings and sales are going to be coming up, and getting hopefully back to more pre-pandemic highs, because they're not quite there yet. Actually, 2020 was a pretty good year for them with in the semiconductor space, but you can see they've fallen off just a little bit. I think a lot of that is some of the things we were mentioning about just manufacturing delays and things like that have caused. There's a big shortage out there. So if you're thinking about tailwinds just longer term, and when I look at these trades, I like to think, can we not only put this trade on that we're looking at now, but can we put on a consecutive 4, 5, 6, 7 trades in a row on the same stock? Because what we can get then is we've got a stock that, so it's got a dividend yield of 2.5% roughly. If we can get 5 or 6 consecutive put trades on, I mean, we're going to be generating, even at a conservative kind of base level, I mean, we'll be getting 12, 13% yields just from the puts without overowning the stock. So we get to keep that margin of safety. We get this 12, 13% yield, on a stock that's only yielding 2.5% if we were to hold it, right? And if you hold it, you still have some downside. And that's not to say we won't get, filled, if we write 4 or 5, 6 different puts, at some point along that way, we may get filled. But again, it's way better than owning the stock outright, in my opinion. And, you're getting a much, much higher yield. You're getting 4x, the yield that you would get normally. So that's the kind of stuff I like. And, again, just looking at this chart just kind of reminds me of, you do want to think a little bit longer term and think, does this stock have long-term tailwinds that, hey, we could write puts on this stock hopefully for the next couple of years, because I like the long-term prospects of it. And so that's always in the back of my head. Even though we're making a short-term trade, that's where it comes into, is it a stock that you would want to own for a while? Hopefully you never do, but is it a stock that you'd want to own for a while? So let's go ahead and take a look at the cash secured puts. So we're going to be looking at August now, because we're within 2 weeks on the Julys. So we're going to move out to August, which is this 820 level. So we're looking at these few trades here. And so you can see, remember 53 was our top end of our range, so that's here. So you can see all of these options obviously have the earnings risk, so that's something we need to take into account. So our base strategy, again, it's target of 1% if we can. Some of these dividend stocks might be a little bit lower, but target of 1% if we can, with a margin of safety obviously within the minimum required. So that means it's just going to be in the strike zone. So anytime we see green here in this column, we know that it's in the strike zone, right? So we know these will meet our required minimum margin of safety if it's green there. So we know that. So this 52.5, we know it's in the strike zone. We know we've got a 1.2% average monthly yield. We've got 7.5% margin of safety, and we got a 23% or a 23 delta. So our delta is under 30 as well. So that meets all of our criteria. That's a great trade for the base. Again, if we can, this is over 49 days. If we can string together, 5 of these over the course of a 12-month period, I mean, that's how you turn a 2.5% yielding stock into a 12% yielding stock, right? And again, hopefully you never have to own it, but you can keep that income stream going, knowing you've got the dividend there. If you ever do have to hold it, again, you collect the dividend, you go through the whole wheel process, you sell a covered call. hopefully getting out, and then you're just going right back and selling, the cash secured put again. And it's, trust me, it is absolutely possible to find a stock like this that you never own for the entire year, and you just collect, you just go ahead and collect your premium. So this one's pretty simple. You've got those nice $2.50 increments, and it almost works out kind of perfectly with our aggressive and conservative levels. So the aggressive one up here, the 55, we're always going to have less margin of safety on the aggressive side. It's, inversely related, but we've got this nice, 2% average monthly yield. And then we've got a 37 delta. And then on the conservative side, we drop down a little bit below our base level. We've got our 0.6, which is right kind of in the wheelhouse of our conservative level. Nice 12% margin of safety, and then obviously a delta under 20 at a 14 level. So those are our trades for Intel. And again, this is one that I like the long-term prospects of it. I think it's a great dividend stock, that pays well. It ranks very well. And I think this is one that we could do consecutive back-to-back, puts on over time. So that's our trade of the day. Take care.